Comparing lenders is, again, not just a rate. It is a rate, it is your gut, it is communication, it is professionalism, it is how their process works, how they're going to guide you step by step. There are so many things that go into that. Hi, by the end of this video, you will have a better idea of how to shop for a mortgage and what in the world does that even mean. Welcome to your one-stop shop for anything and everything mortgage education. My name is Stephanie Weeks, and I have helped thousands and thousands of customers with their mortgage financing. I've been a loan officer for 17 years, recognized in the top 1% of loan officers in production for the past several years in a row by Mortgage Executive Magazine. I also have been recognized by the Scotsman Guide of Top Originators. I drop new videos every Tuesday and every Saturday. Please subscribe to the channel, hit the bell to be notified, and don't forget to share with your friends and family. As promised, I am going to walk you through how to shop for a mortgage, how to shop correctly, to know what you're even looking for, to know what you're even looking at, to understand what you're paying for, and to understand the process of what's going on. I think all of those things are very, very crucial for you to do a good job shopping for a mortgage, because there are many, many ways to do a bad job shopping for a mortgage, and people do it all the time. I want to fix that in today's video. The other things I'm going to talk about and make sure to cover, which I feel like are an important part of this topic, is how to not mess this up. Oh my gosh, I can't tell you how many times I've come across people who thought that they went one way over another because it was going to be a better deal, and they really just misunderstood. One of the things I always say is a rate does not matter if your loan never closes. If you don't shop for a mortgage with the right place, then you could end up never closing. So that beautiful rate you thought you were getting, completely irrelevant, doesn't even matter. And there's a lot more that goes into it than just rate. So stick around, let's dive in. The first thing that I'm going to talk about, and if you watched my other videos, you tune into the channel frequently, you're going to be like, oh gosh, is she saying this again? But yes, I am. Shop for your mortgage before you shop for your house. It is hugely, hugely important. Get with the lender, shop for the best mortgage, then you'll be on the right foot to go find the perfect house that's going to finish our beautiful puzzle and get you into that home. That's simple, but that's number one. Number two, compare interest rates. And how do you compare interest rates? Well, let me tell you, this is not the easiest thing to do. Why? Let me start with a little story. Before I got into mortgage lending, I was building a house. And I thought the best thing to do was just to shop around by calling every phone number I could find for a bank or mortgage lender and ask them what their rate was. And there's a standard answer to what the rate is, or there was years ago, basically. So I shopped and shopped and shopped and found the lowest rate, which at that time for great credit was 6.875. This was in the 90s. By the time the loan closed, because I had no idea that a construction loan was different than just a regular purchase, the interest rates for a excellent credit at that time was then 8%. Yes, 6.8 all the way to 8%, because I also didn't know to ask about the rate lock, what that meant, when I was locking in, when could I lock in, and all of those kinds of things are hugely important. I also had no idea to ask about what the rate was costing me. It sucked, basically. It really did suck. So let's just go through how you avoid the disaster that I encountered at that time. In order to get an accurate rate quote, you need to know all of your information to provide. Because if you call around and just say, what is your rate? Or you go online and type in, what is a mortgage rate? Guess what? Most of those rates that you see quoted are based on a purchase, not a refinance. A 740 or better credit score, when that is nowhere near an average credit score. 30% down, when that's nowhere near what the average person puts down. Most of those rates are also quoted with a point, and once most people are educated about that and know their plans and their time frame for living in the house, most people choose not to pay points. It's also for a loan amount between $250,000 and $510,000. So the second that you're not in that box either, it's another reason why that is not your rate. It's also a conventional loan where many people go VA, FHA, RD. So when you don't go conventional, that is not your rate. There are so many different things, and a few things I'm even leaving off here, that contribute to an interest rate. The first thing you can do to set yourself up for failure is just call around and say, what's your rate? What's your rate? What's your rate? If the loan officer does not ask you 5 to 7 questions and gives you a rate before that, I guarantee you the rate is wrong. I bet you're wondering, okay, get to the point then, Stephanie. How do I shop for a rate, or how do I compare interest rates? What you want to do is you want to make sure that if you are calling around for rate quotes, then you want to say, I'm going to give you an example. I am looking for an interest rate quote. I am trying to purchase a home. I'm interested in an FHA or maybe an RD loan. I'm looking for as little money down as possible. I have a credit score between 7 and 725, according to wherever you got that from. I am not interested in paying points, and I am looking for a 30-year fixed loan, not anything adjustable. What might your rate look like today? It's a lot, I know, but you have to do that to get an accurate rate quote. And also know it's subject to approval. So make sure that you are giving the right information, because you're not going to get the exact perfect rate, but what it's going to help you to do is maybe narrow down. Let's say, I don't know what to tell you as far as, do you call 2 lenders? Do you call 10? I think 10's overwhelming. Maybe you ask friends and family for referrals, and maybe you call 2 and start there. Call the 2, give them that information and get their rate. See what they say. If they're both offering comparable interest rates, then continue to the next steps. If they're very different in interest rates, or maybe even you don't like the way they talk to you on the phone, then ditch them and put in another one in the rotation, right? So that way you can narrow down to 2 to choose from. Or maybe you talk to one and you love that person, then you can just stay there as well. The biggest tip I can give you when it comes to shopping for a mortgage, go with your gut. If you don't like the person on the other end of the phone, you certainly don't want to be tied to them for the next several weeks of trying to purchase or refinance a home. If you feel really comfortable with somebody, go with your gut. Then they're probably the right person for you. You have to go with your gut. That is the biggest tip that I could possibly give you. Let's dive into the next one. That's going to be my number 3, which is how to compare lenders. Speaking of gut and speaking of what makes you comfortable, every single one of us is different. Some of us want to be texted. Some of us want to be called. Some of us want to be emailed. Some of us want an update every freaking day. Please don't be that person. You do not need an update every day. It's not realistic. Some people want updates once or twice a week. Maybe some people, they don't want to be bothered unless you need them or something's wrong. Otherwise, don't call me. We're all different. How are you? What is important to you? How is that lender going to communicate? Start a rapport with them and ask them other questions that you have. See how you feel, see how your gut feels, right? And then talk to them about communication. How do they work? If someone called me and asked me how I work, this is what I would respond, just to give you an example. Hi, Stephanie, I'm interested in getting a mortgage with you. Can you let me know, please, how your process looks or how it is that you work with customers? And I would say that once I have a full application and a credit report, I love to have a conversation with you to talk about your goals, what's important, your monthly payment, your cash out of pocket, the type of loan you think you might want, and the sales price you're shooting for. Once I have that data, I can analyze that, go through your loan application step by step, line by line, make sure we've got that data right, because the application is everything. Everything makes or breaks a deal. So we want to go through all that in great detail. Then I can take your goals, put them together, crunch some numbers for you, and I can let you know if we can hit all those, or maybe I can hit the price, but I can't hit the cash out of pocket. Maybe I can hit the payment, but I can't hit the price. Things like that. That opens up great lines of communication to get us off on the right foot. Once you have chosen what works for you and you are under contract on a house, then I actually will allow you to choose your title company if you wish. If you don't wish, I'm happy to shop title companies for you. The other thing that I will do is I promise to give you an update every single week. We'll be talking in between that as well, but every week on a Monday or Tuesday, you can always expect an email with a detailed status update of where your loan is, whether or not we're on track, and what's needed and who is it needed from, so we can tag team it to keep you on time. That's a mouthful, yes. So if you're the person that wants an update every day, that might not be good for you. If you're the person that wants an update once a week, then you might love working with me. Asking those questions is going to really help you compare lenders. It's going to give you an indication of, does the person know what they're talking about? Because you can kind of tell when you start quizzing people. Does the person seem professional? Does the person communicate well, and how do they communicate? Comparing lenders is, again, not just a rate. It is a rate, it is your gut, it is communication, it is professionalism, it is how their process works, how they're going to guide you step by step. There are so many things that go into that. Number 4 is, how do you compare closing cost? Let me say that this is not something that you're going to get in the first phone call. If you call and say, what's your interest rate and what's your closing cost? It's a complicated question that would cause me as a loan officer to ask you multiple questions. Why? Because closing cost on FHA is different than RD, is different than conventional. What type of loan are you doing? Do you want to pay points or not? Because that affects the closing cost. Do you have a certain title company you want to use? Maybe they're more expensive than other title companies. What are you spending? If you're spending $200,000 on a house versus $350,000 on a house, guess what? Again, the closing costs are going to be different. Are you getting my drift? It's complicated. Once you are a little further into the process with the lender, and maybe you have a property to where the lender can actually look up property taxes, figure out some home insurance figures, things like that, that's a better idea of total package of closing costs. Don't forget, there's closing costs and there's prepaids, and those are different. But when I talk about closing costs, I mean everything. And I say that because when I'm buying something, if it's $10, tell me it's $10. I'm probably cool with it. But if you tell me it's 1 and then it's 2 and then it's 4, and then I'm not going to be happy. And so that's how I assume other people are as well, that you want to know what is the cost. So anyway, with the closing cost, you want to look at the lender fees, because the prepaids are going to be what the prepaids are going to be. It is what it is, okay? And the appraisal is probably going to be what it's going to be. What can you narrow down of those closing costs? Well, if you separate points and you separate prepaids and you throw out the appraisal, because that's probably going to be what it's going to be, that's going to leave you just with lender fees. So you can say, hey, what are your lender fees? I know there's a lot of other costs involved, but what do you charge specifically? And that's a great question, because every lender's different. I have seen lenders that are an average of $3,000 in lender fees. And I've seen averages higher and I've seen averages lower. And once you have that information, if you call one and they say my fees are $2,000, and the next one says my fees are $2,400, and the next one says my fees are $3,000, you have a range. It gives you a ballpark. If you call and you get those 3 answers I just mentioned, and another person says my closing costs are $300, they're probably leaving something off. The good news is you're going to be educated enough to know the difference. Number 5 is knowing what loan is right for you. Why do I say this? Because if you have an idea that you are pretty hell-bent and determined that you want to do an RD loan, that's amazing. Guess what? Not all lenders do all loan types. So if you're very confident in the loan that you want, make sure to ask the lender what types of loans that they do. Maybe you're looking for a renovation loan. Not all lenders do that. Maybe you're looking for conventional versus FHA versus RD versus VA. The type of loan that you want may also contribute to what loan officers and mortgage companies and what mortgage is actually right for you, and where you can get that and where it's available and who it's available with. That is just my 2 cents today on how to shop for a mortgage. I hope it's been really, really helpful. I'm sorry it was a little bit long-winded, but it's a lot of information. And that's the challenge with mortgages. There's so much information, and it's so insanely case by case that it's hard to find the right answers. That's okay though. Hang out with me, stay tuning into the channel, and I'm gonna help you find those right answers and know what to do. Today's download is going to be your goals checklist. I think if you know what your goals are and you kind of make some extra notes on that checklist as far as your goals for communication through the process and things that are important to you about a mortgage lender, that's really going to help you identify which person is best for you as you're doing your shopping around. If this video has helped and you feel better about shopping for a mortgage, please type peace in the comments. I'd love to hear from you all. Thank you for watching. If you have not subscribed yet, why not? Go ahead and do it. What's it gonna hurt? Seriously though, subscribe to the channel. Don't forget to hit the bell to be notified. Please do share these videos and the channel with your friends and family to help me spread my mission of mortgage peace. And since you're here with me today and you're visiting anyway, stay a little longer. Check out some of these other videos. I'll drop some links up here.